Rajat Sharma joins us, founder and CEO with Sana Securities. Rajat, what have you done in last 2 days? Are you chasing the momentum, or are you waiting for a bad day, a bad dip before re-entering?
Good morning, Nikunj. So, in the last 2 days, the only thing we've done is we've actually sold a lot of stocks. I think there's a lot of hysteria, there's a lot of noise around buying stocks, and this could be a game changer, the tax cut and everything. I look at it this way. I mean, a lot of these companies that we were holding in the mid-cap and small-cap space, they were anyways not making any profit. So I don't know how a tax cut on their profits is going to help. Now, I don't want to get carried away. It's hard to make money, and it's, difficult to earn a decent return on that. So last 2 days, definitely we've sold a lot of stocks, and I think at some point this madness will settle down. Markets will come back to the true value, to the real price at which they should be trading. Right now we're in a zone where overvalued markets have become even more overvalued. This is just, I think my perspective, and a lot of the stuff that I'm reading right now, it looks like people are extremely bullish, and it's worrying for me.
Fair enough. Rajat, there have been a few voices that have been trying to sound the word of caution here and there, but I think markets, like you said, don't want to hear that right now. Definitely a lot of momentum that's building up currently. If you did have to go in and look for some opportunities, given that there has, does seem to be a shift in sentiment, and there could be companies that do gain from this, where would that be? In which pockets?
Yeah, so Abha, when I look at markets right now, I look at it this way. You pick up any stock and you think about whether you would buy the stock or sell the stock at the price at which it's trading. And when you look at stocks with that perspective, you'll realize a lot of the stocks, their earning potential does not justify the price at which they're trading. In terms of which stocks and which pockets you can still buy into, I think there's a lot of sectors and a lot of stocks which are still available very, very cheap. I may probably be the only one who still likes pharma, who still likes IT, because I was, hearing about, negative news on IT and pharma. I think these are sectors where valuations are still very, very reasonable. Auto is the other one, but then the only thing is you never know when auto cycle revives, and when, I could look foolish by saying you should buy auto stocks right now, and then they fall another 10%. So you might as well wait for, some positive news to come out of that sector and then buy it. But definitely IT and pharma and even consumption. I really like ITC as a stock, which I've always liked. I think the last 5 years it's done nothing. So there are selected stocks that you could buy. In banking, we were talking about, I really like Federal Bank as a stock. That's in the mid-cap space. So there are stocks which you can buy even in this market. But my worry is that a lot of index buying has happened, and a lot of, Nifty, which was already overvalued, now looks extremely overvalued. So whenever there is a correction, everything will fall.
Here are also some big market voices that we've been getting on the channel ever since the corporate tax cut was announced, and the kind of effect and bearing it'll have on growth in numbers.
It's finally good to see the smiles coming back on the faces of fund managers and the stock market players.
This big step is very powerful, and in our view, the most important thing is the lower tax rate for foreign investments coming into manufacturing, because that's where the delta would be.
India will go for growth, and if it means to loosen the fiscal purse, we will do that. If it means giving a lot of incentive for fresh manufacturing capacity, we will do that.
Definitely some short-term positives out there, but things will take time in order to have a proper growth impact.
That's a great news. Of course, this will also attract FDI, but that will take some time to come, maybe a couple of years or a year or so. But yes, it is setting a path for global competitiveness.
Well, thanks. I mean, it's just such a phenomenal market re-rating. My personal view is that markets have gone up by 8.5%. I'm talking the Nifty language here. The consensus earnings upgrade, and I'm putting a consensus number here, which includes Goldman Sachs, UBS, Morgan Stanley for the Nifty. We're not getting into individual stocks. It's about 7 to 8%. So fundamentally, if I map the market, you've pretty much covered the best case scenario. 7 to 8% is what you would gain. because of earnings upgrade. That's what consensus view is. Nifty is already up 8.5%. That's one. B, not everything will translate into economic reality because companies will follow a different form of deferred taxes. Yesterday, I read a report where it said ICICI Bank will open about 200 new branches. So whatever cash which banks could have, they could use for branch expansion, they could use for provisioning. So not everything will translate into complete cash flow, which is what I think markets currently are betting on. But markets can always overshoot. When there is momentum and when there is liquidity, you should not really try and guess the market level, because from a level of extreme depression, oversold conditions, if markets are in a mood, if markets are coming back, the force is going to be very strong. And I think that is what is at play. The naysayers have turned buyers. If you're an institutional investor, you have to come in because you do not want to be caught with your pants down. We are underperforming the index. As it is, fund managers globally are being criticized for underperforming the index. So they really have to catch up. So compulsions, I think, are also at play. Hemang, before we let you go, let's talk about PSUs. To be very clear, Hemang, the view on this government has changed. It's no longer, this government where the opinion was that they were not really bothered about economic policies and they were not doing anything to rekindle the economy. That view has changed. If the underlying view toward government action has changed, do you think the underlying view for PSU stock should also change? Because that's where value is, and that's where the concern was because of government dumping via the ETF routes.
I think, Nikunj, we should take a company by company view rather than taking a broader view on the PSU as a sector. Yes, there may be a bit of a sentiment booster because of the steps which have been taken, but I think some of the companies which would stand to benefit are clearly the oil marketing companies. So because of the higher taxation that they are paying, and the fact that there could be some sort of a positive news flow in terms of the divestment, etc., or some kind of a scheme to really unlock the value, there could be some re-rating for select PSU companies which are doing well. But I would definitely not be too positive on the PSU banking space, because I think a combination of tax cut or overall growth that one is looking at is not looking that impressive for the PSU banking space per se. So yes, some of the companies in the oil marketing space are looking interesting.
Okay, fair enough. Hemang, thanks so much for joining us this morning. Let's also, continue to chat with Rajat. Rajat, you can't be bearish all around. There must be something that we can talk about this morning. Let's talk about some of these consumption names. We've got a few of them sitting on all-time highs, and consensus seems to be building. Whether or not fundamentals agree, but they're definitely in favor at this point. Again, even if we were to see an earnings revision down the line or consumption pick up, how long would you give it, before we start seeing that reflection? Is it not worth it to perhaps get in at some of these stocks that may seem overvalued today, but could still deliver, given that growth is probably going to come back?
Yeah, so two things, Abha. I'm not bearish at all. I'm not bearish, let alone be all around. I'm not bearish. What I'm saying is that I do find stocks which are available at a very, very attractive valuation, and I'd like to buy them. But I think when overall markets fall, these stocks will also fall. That's what I said. Now, in terms of buying overvalued stocks, if they are overvalued at some time in future, they will become, they will fall from the levels at which they're trading. In terms of where I still find opportunities, as I said, IT, pharma, auto, these are sectors where, if you had a 2 to 3 year view or maybe longer view, you would like to buy stocks and hold on to them. But then you don't have to, be worried about or think about the stock that I bought is 10%, 15% below where I bought it. Nikunj was making a very interesting point earlier. A lot of fund managers around the world are right now concerned that they have not outperformed the broader indices. And I think if you were to talk to a long-term investor, you'll have to explain to him that what we're buying today, you should look at the performance of that in the next 3 to 5 years from now. Otherwise, don't get into stocks, because this market is very, very risky to be in stocks. It's an overvalued market, and a lot of stocks that you'll buy are good stocks. You'll buy them. They'll make very good return in a longer period, but they may just fall in the short term.
On that cautious note, let's tell you what's making headlines this morning in the Economic Times. Hot off the press, and the stimulus, it seems, will restore confidence amongst both domestic and foreign investors. That's the Indian government and their commitment to promoting private enterprise and make them the principal driving force of economic growth. That's the word coming in from Niti Aayog chief. Also, India's biggest automaker, Maruti, is expecting sales of its cars in September to be higher than the previous month. Maruti's top boss, R.C. Bhargav, says, and I quote here, "We expect that retail sales in September would witness an improvement over August. The expectation is that the 29th and 30th of this month will probably witness very high retail sales." Also, home loan major HDFC is set to buy out the company's promoters of student loan company Credila as it looks to grow quickly and prepare it for a listing in a couple of years. That is what sources seems to be indicating to the Economic Times. In fact, the home loan behemoth is said to be in talks with promoters to buy out the remaining around 10% stake in HDFC Credila.
CK, coming on oil marketing stocks, and let me also add one more point. Or let me rephrase it, CK, completely. I just lost my thought there. Between FMCG, which is Asian Paints, Nestle, Britannia, which saw a chunky move yesterday, and oil marketing stocks, OMCs like HPCL, BPCL, and IFC, which is a better category for traders, CK?
Well, if you're asking from a trader's perspective, then I think stocks like HPBP always have held out much more than their FMCG leader counterparts. That's mainly because the FMCG leaders have always traded at lofty valuations, and supplying them is always a little bit deficient compared to the HPBPs of the world, where supply is always plentiful. And therefore, greater liquidity is present in a HPBP compared to a Britannia, Nestle, or a Lever. So from a trader's point of view, they go where the volumes are. From a valuation point of view, also, maybe the oil marketing companies are at tough valuations compared to the lofty valuations of the FMCG lots. But then currently, the market seems to be on a thing which appears to be favoring the consumption stocks, mainly because the market is actually playing the tax arbitrage angle. Now, the HPBP IOCs of the world are actually playing catch up because they had been hammered out of shape in recent times, and therefore short covering and a mix of some new buying at the lower levels is kind of propelling them upwards. But if you were to ask me between the two sectors where is real buying happening, I would definitely point to the consumption side. Now, to the question of whether traders should favor the consumption or should they favor the oil marketing, it really depends upon what is the length of their trade. If you are looking at a more sustainable positional play, then I would think FMCG would most definitely present you with better trading, longer lasting, more durable trends. If you are looking for faster payback and short-lived trends, I think HPBP will fill that slot. So it all depends upon what is it that you're looking at and what is the kind of player you are.
Let's move on. And a whole host of stocks which have seen upgrades in terms of EPS as well as price targets after the government slashed their corporate taxes just last week. Jayesh joins in to get us this entire list of stocks that have attracted a whole host of upgrades since Friday. Jayesh?
Aisha, very interesting list that we have pulled up both in the terms of EPS upgrades as well as the target upgrades that we've had for the stock since Friday's up move as well. First, let's have a look at the EPS estimate revision that we've had at hand. And now, whole host of names over here, including some large and mid-cap names as well. You have the likes of HDFC Bank, which has seen the biggest EPS upgrade for FY20 as well. Grasim, M&M, and you have Bajaj Auto also featuring from the Nifty as well. From the mid-cap space, Bank of India really, that's the big upgrade that we've had. But in terms of target prices, a stark difference. Only the large cap names have been upgraded as far as their targets are concerned. Have a look at Avenue Supermart's 2.6% target upgrade in the last 2 days itself. That's the only non-Nifty name featuring in the top 10. Of course, Nestle being the other one, but very soon this will also be included as part of the Nifty as well. But if you have a look at the other names, you have Asian Paints, HDFC Bank, Titan, HUL, Maruti, Bajaj Finance, Kotak Bank and SBI, all of them Nifty names. So, clearly you can see that the analysts are still preferring the large cap space when compared to the mid and the small cap space as well.
Jesh, what you're saying is that the DMart earning consensus has gone up by 2.6%, right?
Nikunj, for DMart, that was the target price that the analysts have. If they had a 1800 rupee target price before Friday, that has been upgraded by about 2.5% in the next 2 days.
HDFC Bank has seen a 10% upgrade, BOI has seen a 7% upgrade, Grasim has seen a 9% upgrade. So I'll tell you what, let's look at these three names. HDFC Bank 2-day change, Bank of India 2-day change, and Grasim 2-day change, right? 1077 is the earning upgrade. Let's look at the 2-day change for HDFC Bank, Grasim and Bank of India. Have these stocks gained more than 10%? Have stocks gained more than the earnings upgrade? Grasim, almost equal, 7% earnings upgrade, 8% is what the stock has gained. HDFC Bank, 10% earnings upgrade and a 13% stock move. Rajat, whereas for lot of stocks, the earnings upgrade is less than what the stock appreciation is. Do you think this is a red flag, or we should ignore it because to do this kind of a point-to-point scrutiny in a momentum stroke liquidity driven market would be impossible?
Yeah, I think the latter, Nikunj. It would be impossible to do that. Also, a lot of the stocks that have not probably moved up in line with how much the earnings have been upgraded, the reason could be a lot of those stocks were already expensive. Now, if you were to look at things, case by case, HDFC and all these stocks moving up, these are stocks which are held by every mutual fund in India. So, whenever the market moves up, these are the stocks which drive the market up because, if you look at the data for the last, for the month of September, other than yesterday, FIIs have not really bought anything into this market so far. So, and the domestic institutional buying that happens, it happens typically in the stocks that you were talking about or naming. Also, one more point that I'd like to make is earlier you were talking about PSU stocks, and a lot of those stocks are attractive right now to buy, but purely because of their dividend. You were talking about oil marketing companies, HPCL, BPCL or ONGC, even Coal India. A lot of these stocks, even in this market, are available at a price where their dividend yield is very, very attractive. But I think to make up for the loss that the government is going to make for cutting this corporate tax, they will be disinvesting a lot. And I think you never know which companies get disinvested. So I think there'd be a constant flow of stocks in these PSUs which will keep coming into the market. So any PSU stock, don't expect it to rally anytime soon because the government will be selling this, and you never know the price at which this sells. If you were to look at the government as a private businessman, they will be a little desperate to sell stocks because they have to make up for whatever losses they make by cutting this corporate tax.